Today, we finally see the changing of the guards a little bit. The energy and the financial sector are finally putting a good performance today, and the technology is finally showing a little bit of underperformance. So, does that mean the technology finally going to bring us the correction that we've been looking for? So let's take a look at the sector in the S&P 500. As you can see, the XLK, the technology sector today, lost 0.77% or 1.13. So it was the worst performer for the day, and the best performer was the energy, and then followed by the financial. The energy sector gained 2.13%, and the financial gained 1.39%. So we saw a little bit of a bounce back from those banking stock today. And looking at the indexes, we see that the Nasdaq 100 and Nasdaq Composite were the worst performer for the day, and the Russell 2000 and Dow Jones Transportation were the best performer for the day. With the S&P 500 sort of neutral today, didn't do too much, basically because of the large cap tech stock is dragging down the gain that is being made by the energies and also the financial sector in the S&P 500. So all in all, the S&P 500 look kind of neutral. But looking at the Dow Jones Industrial, the Dow Jones Industrial also gained over 0.5%, along with the New York Stock Exchange Composite almost 1%, Russell 2000 1%, Dow Jones Transportation 1.33%. And looking at this intraday chart here, we see the S&P 500 open gap up, but it also came down and closed the gap right before the lunch hour. Then afternoon, we see a little bit of a running back up and try to tag the high of the day that was made early in the morning, but unable to do so. Then we see that finally the OPX stuff came in and pulled this thing back. The up-down volume ratio was quite impressive today. It was positive throughout the entire session and closed with a little bit over 3-1 in favor of the up volume. And you can see early in the morning it was up here at almost 6-1, and even up here it was close to about 4-1 here. And looking at the VIX, we did see the VIX kind of pull back a little bit, but it's still sitting up at this 20 level, and it closed at 20.85. So, the market participant is still kind of wishy-washy on the fear side. And also with the put call ratio sitting at 0.84. So again, it is between this 0.7 and 1 level here. So the market participants are still a little bit bearish and definitely risk off. Although the daily advance decline, we did see 1,471 more advancing issue than declining issue. So it was quite a good internal based on strong internal based on the advanced decline for the day, even though the S&P 500 was only up 6 point or a little bit over 0.16%. If you find the content in this video to be informative and useful, be sure to smash the thumbs up to give it a like and help promote this video on YouTube. And if you are new to this channel and like to continue to watch these videos from me, then subscribe. Let's take a look at the emini S&P 500 market profile chart here. Remember last week we talked about this balance area, and we talked about this balance area quite a few times. Remember we were saying that between this 39.40 and 40.40 and this balance area, and if it could break above this and we claim this FOMC, this prior FOMC level here, the 40.73, then we could be watching the ES possibly come up to this next balance area between 4100 and 4160. So you can see last week it tried to get up here and we claimed this 40.73 and unable to do so. Then it fall back into this balance area. So now we are looking for the possibility of it retrace back down toward this 39.40 if it is unable to get another poke above this 40.40 area sometime in the next couple of days. So that's the key to watch. And also notice that we still have a lot of these unfinished business down here that need to be cleaned up. So the first one is here down at this Friday's POC at 39.63.5. And then we got these poor low and single prints down here that need to be cleaned up, as well as the poor low here. Now today we also had a poor low putting in. So we have to keep an eye on that. And there's this POC here somewhere around 40.12 here. And I will update this chart with those levels later on today. So definitely those are the key things to watch here. But once again, we need to see would it be able to get above this 40.40. And if it's unable to do that, then look for it come back down and clean up a lot of these unfinished business. And looking at this ES chart here on a daily basis, you can see that right now it's sitting right underneath this composite point of control of this composite volume profile here. So the upper range for this week is somewhere around this 40.97, and the lower range is between 39.25 and 38.85. So right now it is sitting underneath this composite point of control and also below this trend line here. So the expectation here is if it come down and dip below this 39.66, this zone here, then look for a move into this weekly expected move lower range and possibly come down and test this 38.31 here, essentially testing out this low. Now, the other thing to keep an eye on is this December low here. If we take out this December low, then we could very well expect it to come down and try to tag this lower edge of this balance area, and the October low will be in play. So keep that in mind and watch this December low here. Now, if it is able to get above this point of control and break this trend line, then look for a move up to this upper range of the expected move in the area of 40.97 and possibly get up into this zone here up at this 41.24, 41.25 area. So those are the upper level to keep an eye on. Now let's take a look at the ETF for the S&P 500. And as you can see from the this daily chart here, we see that the upper range for this week is somewhere between 405 and 404, and the lower range of the expected move is between 387 and 384. As you can see right now, it is sitting right above this composite point of control. Remember, we're talking about this high volume balance area here. And if it could get above this trend line here, then we could look for a possibility of moving back up to this upper edge of this balance area. And we could see this 405, 404 upper range to get tagged. Now, if it is unable to get above this trend line and pull below this composite point of control, which is somewhere around 394, then we'd be looking for this thing to pull back down to this lower range between 287, 284, and toward this lower edge of this balance area at 374. And looking at the QQQ, the ETF for the NASDAQ 100, as you can see, the upper range for this week is between 320 and 318, and the lower range is between 302.90 and 300. Right now, it is sitting right at this edge of this balance area here that we've been watching. And what we're saying that unless it could break above this balance area and move up toward this zone here, up above the 320 level, then we could see it might possibly trace back down to the lower edge of this balance area and eventually get down to this 270 level. So right now, we're basically looking to see will it continue to pull back and dip into this lower range of the expected move. And if it does, then watch this composite point of control. And if it dips below this composite point of control, then we could see the possibility of the QQQ coming back down to this 270 level. Now, also in addition to that, we also see that there is this bull flag that's people might be watching, and the major move from this bull flag, here's the 80% level, which would be somewhere around 327.50, and the 100% major move will be somewhere up at the 339. And here's the IWM, the ETF for the Russell 2000. See that it came down to this balance area last Friday and closed back above it. Today we got a nice bounce. So now we're going to keep an eye on it to see would it be able to continue to bounce up to this upper range of the expected move between 178 and 177, or would it come back down and break below this range and break below this 170.75 and dip outside of this balance area and work itself back down toward this lower range between 166 and 164. Now, if it come back down and dip below this balance area, then this October low is in play. So that's key to watch to see would it be able to hold inside of this balance area and work itself back up. Because right now we essentially saw this retracement back all the way down from this top edge to this lower edge. Here is the look above and fail. So are we looking at this thing, look below and fail and come back up, or basically it's just a little bit of fake out, test and go. So that's the key things to watch in the coming week, to see what it be able to hold about this 170.75. So those are the indexes ETF. Now, if you like to learn how I use this fixed volume profile, fixed range volume profile from TradingView, which is free. If you want to learn how I set it up and how to use it to identify these zones, then watch this video. I have posted this video earlier and I have the link in the description below. Go and watch that and see how to get access to this fixed range volume profile in TradingView and how to set it up the way that I got it set up, and also get some tips that how to locate these various support and resistance zones. Now let's take a look at Apple. Apple here is outside of this balance area. Remember this balance area that we've been watching, and right now it is up at the near this 160 zone. So it's key to watch for Apple. Will it come back into this balance area? And if it does, then watch this lower range of the expected move between 155.80 and 153.50. Now, if it could stay above this this balance area and move above this 160.54, then watch for the upper range of the expected move somewhere around this 165 area to get tagged and see would it be able to come up to this trend line here near this 168. If it dipped below, come back into this range here, this balance area, and come down and test this trend line, and it's unable to hold this trend line, then watch this composite, this composite point of control here, just under this 152 area. And if it dips below this composite point of control, then look for the possibility of working itself back down to this lower range here, up down here near the 135 area. And looking at Tesla, Tesla is sitting right at this composite point of control at this 194 area, and also beneath this little bit of a short-term trend line. So bump into a low resistance here. So we'll see, will Tesla come down to this lower trend line here and tag this weekly lower range of the expected move between 178.70 and 175.60, and see would it be able to get a bounce off of that. Now, if it doesn't, then we're basically looking for this thing to retrace back down to this 146 area and fill this gap. Now, if Tesla could break above this trend line here, then look for a move into the upper range of the weekly expected move between 205.60 and 202.10, and see would it be able to get up to this trend line here near the 214.66 and possibly break out of this trend line and move up toward this 230.83. Now, if you're interested to see my full analysis on all the FANG stock, then go and check out my Substack page, and the link for that is smtraderca.substack.com. I'll also place the link in the description below. Let's take a look at the ETF for gold, GLD here. You see that a couple weeks ago it came up here to this 186.50 and pulled back to this composite point of control near this 179.48 or 179.50 level, and then pushes back up once again to this 186.50 and got rejected once again. And today it pulled back to this 181.75. I'm looking for another pullback, another test of this composite point of control near this 179.50 area, and see would it be able to get a bounce off of it. And that's why I probably will start looking for a long setup to possibly get in on some long here for gold or GLD to swing back up and possibly get up to this high here at 193.30. But if it doesn't hold this composite point of control and dip below that and come down to this 175.95 or 176 into this zone, I'd be watching this trend line. So if it get a bounce off of this trend line here, then again, I'd be looking for a long setup to enter a position to swing long up to this level here, 193.30. So I'm looking at gold on an uptrend here, basically due to the recent bank crisis. I think that still hasn't been completely resolved yet. And also the impending real estate crisis, especially the commercial real estate. I think that's going to be the next area of problem. And also with everybody's mind in the looming recession, that everybody is kind of expecting a recession now. About a couple of weeks ago, a month ago, a lot of people still believing this soft landing. I don't think there's going to be a soft landing at all. We will see a recession soon if we're not already in one. So that's the reason why I'm looking at gold here for a possible swing long type of position. So these are the two locations that I will be looking at, 179.50 and 176. Thank you for watching.